All right, let's jump into it. All right, where we at? 11:21 p.m. So a little bit later on the Sunday, but as I kind of pretty much say every second week and that, as long as it's done before the markets open, that's all right. And look, it's a bit of a mix with ECs because like I do like sort of getting it done early in the weekend, get it out of the way, this kind of thing. But at the same time, the market's so twitchy at the moment, and like we can get like a headline or something pop out over the weekend and that can kind of really skew this sort of analysis a little bit. So it's a mix of the two in that. Look, it's nice to get out of the way, but some things can happen over the weekend sometimes, and that can sort of change how things are opening. It doesn't so much look like that is the case this sort of weekend. Obviously, sort of pick this up on that by basically how well, obviously just what's coming out in the news and also the sort of the headline, sorry, the headlines, basically, yes, that's it coming out of the news, but the weekend markets can give us a little bit of an insight as to sort of how things are looking there as well. So anyway, let's jump into it. So just recapping that sort of data that we had out on Friday night, which of course was the big one that everybody's been looking at for ages, was the non-farm payrolls. And it came in weak. It came in very weak. It came in a lot weaker than they were expecting. So 79 revised up as the last month. Okay, fine, whatever. That's a kind of sniff in this kind of thing. And I think they were expecting, as you can see, 75,000. Came in at 22,000, which is pretty, yeah, shocking when you sort of consider the fact that this is like, the country with what, 350 million plus people, and you're adding 22,000 jobs. And sort of course, non-farm payrolls, that's a sort of private and also government sort of sectors in there. So, that's a combination of the two. So, yeah, look, it's not a great picture, particularly with the fact that, this is what Powell's been saying. He's flipping the look and the sort of the focus to be more on the job sides of things. And we had the three major, well, kind of major, but first week of the month, kind of major jobs data there out this week. We had the JOLTS, we had ADP, and we had non-farm, and every single one of them was expected to be kind of a flat-ish in the ballpark of being flat. And most of them, well, I guess there's only three, but like, most of them there came in weaker. So obviously non-farm is the big headline one that people sort of look for, and that was a big drop off there. And look, the initial reaction off the bat was what you'd expect, because obviously this supports the idea of more cuts for the Fed, of course, coming up in 10 days now. So US dollar sold off. That's pretty much what we expected. Gold got a bit of a pump, actually sort of recovered very well. It had a bit of a dip sort of throughout the week on that sort of China headline. But the recovery there pushed right up, 3,600, kissed it a couple of times, sold down a little bit into the end of the week, but that wasn't sort of unexpected. But US dollar was an interesting one because it sort of pushed down and tested out the bottom of its range, but actually where it closed, which I think is kind of important, kind of still gives it a bit of a question mark. It's not so clear at this point that, okay, yep, bang, they were going down, we're cutting. You start to see a little bit of headlines of people saying, hey, look, it's going to be a 50 base point cut and all this kind of thing. I think that's a bit excessive. And if that is the case, then a 25 will be seen as a disappointment, which means a 25 will actually add to a little bit of a bid on the US dollar. But look, we got 10 days till that sort of comes, so there's a lot of stuff to happen between now and then. So yeah, that was a interesting sort of way to finish it off. We'll obviously get to the charts in a moment. So let's jump onto this week coming up here. All right, so what do we got on the cards? Monday, got a bit of China data coming out, a bit of Japanese data coming out early there as well. But again, look, this isn't massively, I mean, look, it's flat. So it's not, I don't imagine this is going to be anything major market moving. What I'm kind of looking for is the initial reaction from, well, actually the second, I'll get to it in a moment, but basically the overall direction that we saw after the NFP, are we going to see that sort of basically kick back into gear and continue moving forward? And that's what's going to be interesting for us. Bit of China data coming out, again, looking reasonably flat, actually a little bit of a sort of tick up. So yeah, look, that's not really something that I sort of cover a great deal with at all, but bit of China data sort of kicked the week off. Apart from that, not really a great deal sort of looking like it might sort of be moving the markets, or at least not for sort of what I'm sort of trading anyway. A couple of bill auctions and that Monday night. Something to keep an eye on, but again, it's not going to be something that's massively moving the market, I don't imagine. Um, Moving forward, what we got? So business conditions, a bit of Aussie data, consumer confidence coming out. Look, I don't know. Is it just this website? Hold on, let me pause this. All right, so just swap over to this other on here. I only just swapped onto this different sort of calendar, so it's just about sort of working out, probably fine tune that. Look, we'll stick with this one just to see what's coming up on the week. Um, so yes, where were we at? The sort of consumer sentiment. No sort of forecast or anything at this stage for that. It's a little bit interesting, but moving forward, again, nothing sort of massive market moving in that through the Monday, Tuesday. Wednesday we got CPI, PPI out of China. Again, like these numbers are always a little bit odd, but it's moving down with it all. So obviously, if CPI's, you don't want inflation, that's fine, but you don't want sort of disinflation either. Because really, if things are sort of moving down too much, people just sort of hoard. Like, because the thing is, if like the way that this works in a nutshell is sort of like if you've got a bunch of products and basically, you could sell them today or basically inflate, like it's disinflation sort of moving down the other direction. Well, they're going to be worth more next week, not worth less. So everybody's sort of stuck in a world of our side of stuff, sort of dealing with inflation, and prices are going up, but the prices are going down here. So it would be the basic idea with this kind of thing. If prices start to decrease too much like that, it's not that you lose the incentive to sell the product because it's going to be worth more the longer you hold on to it. And that can sort of have a detrimental effect in that, obviously, sort of like with people hoarding stock and not trying to sort of push things through. Because why would you sell it today when it's going to be worth more in a couple of days or weeks or whatever? So that can have a bit of a detrimental impact in that. So, as a general sort of thing, you're looking for where we at here over here. You're looking for a 2%, like that's a kind of the accepted standard level, healthy level of growth of inflation and that across the market. So obviously, sort of everyone's talking about, oh, we've got to sort of got to cut rates um, to sort of bring down the cash rate, but you got to make sure that inflation doesn't kick out of gear. Well, they actually would probably want to get inflation pushing up a little bit here. So maybe cutting rates is the sort of task for them to do. There's a whole bunch of sort of stuff going on. I think they did actually, or say, announce some sort of financial package in that a while ago, a couple of weeks ago or so. But it certainly has not been affecting the yuan. Like the yuan's been very strong, and it's actually testing and just came back down to test a level after during Friday's session. Um, but the yuan has been very strong over the last couple of months, pretty much since April. Like we had that little sort of spike right up, which is I can't remember. I think it was like a 13-year high or something like this. It was certainly longer than I've ever weaker than I've ever sort of seen it. But that was off the back of everybody sort of thinking, oh well, last time Trump was in, they depreciated the value to sort of offset some of the tariffs, and obviously sort of these uh, countries sort of like or economies and like to sort of have a weaker currency to make them more attractive for particularly if they're a sort of pretty heavy exporter for people to buy their product. If the currency is too expensive, well, it's people look elsewhere, kind of thing, where they have an option, of course. But yeah, back to this sort of thing, I would say that sort of there's an idea that potentially they would want to see this like sort of not potentially get too out of hand in that. So look, as to whether they actually act upon that based off these numbers, it'd be interesting to see. I'll keep an eye on it. Look, I don't think these are kind of the bits of data that are really going to sort of like have the market flying around outside, USD, CNH, but and CNY or whatever the other one is, the onshore one. But it is something to sort of keep an eye on. And obviously, they would probably most likely want to be getting this moving in the other direction as well. Anyway, moving forward, Wednesday night we have PPI from the Fed. This is one actually ticked up a fair bit last month, so it'll be interesting to see if that's just a sort of outlier. Because if we have a look at what they did last month, on the core here, yeah, so it was 0%, and as you can see, massively up on what we've seen for quite a while now. Actually, if we have a look down, look. It's at a highest level that sort of we haven't seen for ages. Um, and it was a very big jump up as well, because this is just monthly on this here, and zero basically flat, looking to sort of move up a little bit to 0.2, but it came in 0.9%. So this is the idea that sort of PPI, obviously producer price index, that further up the stream, up the trough, whatever you want to say, with it, if they're paying more to sort of sort of basically, if you're seeing inflation at that level where it's going to the wholesalers, well, you would assume that that's going to be passed on. Like, it's got to go somewhere. And are these people going to absorb it? That's the question. And, while everybody's sort of looking left now at the moment going, hey, it's all about the jobs, jobs, jobs. Look, I think if inflation does kick up, I think they are going to sort of be like, have a little bit of something to say about it. You know what I mean? Because it's all very well to sort of say that, hey, look, 2% is our target. We're not there yet. Well, if we sort of get onto the US CPI, which is obviously a couple of days later, um, if inflation does start to kick up, I don't think you can just ignore it. Yeah, the jobs are sort of weak, but this is I guess sort of like what's stagflation. So this is might be sort of building the case for this, that if you do have a sort of slight little bit sort of a weaker economy, look, the rest of the US data doesn't seem too bad in comparison at least to these other sort of majors. But if you've got sort of the jobs market sort of coming down, well, as was said previously, the way that you combat that is you cut rates. But if you've got inflation flying up at the same time, that's what stagflation is, and that's sort of like, you can't, like, you're sort of like a weakening economy, so you would sort of go, okay, let's cut the rates to sort of address that, but you've got inflation at the same time. So if you cut the rates to help the jobs market, then inflation's going to get out of control, or has the potential to get out of control. And that's starting to build a little bit of this sort of position at the moment. So it'll be interesting. We'll see what happens with this. I think, look, if this goes back down to 0.3, 0.2, whatever in that area, I think you'll be like, okay, well, this was just a bit of an outlier. Look, it is a fairly high jump, and as we had a look, for at least over the past, go back here, look, going back to July 22. That's the last time it was up these levels. If we see it sort of back down around this band, that we've sort of seen for quite a while, I would say, okay, yeah, look, it's just a bit of an outlier. As you can see, look, this one over here, 0.6%, next one, 0.2. You know what I mean? So let's see how this one sort of pumps out this week. But again, if this comes in high, I think you're going to see a little bit of talk about sort of like, yes, we're all looking at jobs, but let's not forget the other mandate that they need to address and chuck into the equation, which is the inflation side of things as well. So that'll be an interesting one through Tuesday night, Wednesday night. So Monday, Tuesday a little bit quiet. Wednesday we've got a bit of data that might move the market moving forward there. Moving forward, the rest of these, nothing really of interest. You got PPI over in PPI over in Japan there. Inflation expectations. We haven't got, obviously, well, that's the forecast. That's what it's expected. So we can sort of see how this sort of ticks up here. That's moving into sort of lower direction. So again, sort of more in the idea of inflation not being so much of an issue for Aussie, but we'll see how we go. Aussie, it's holding in there. It's holding in there. A little bit of a sell-off into the end of after that big spike, but still managed to stay above the data drop point, which I'll get to in the charts in a moment. We got sort of cash rate over in euro. So euro sort of cash rate over there. Okay, so looking to hold flat. So not much to sort of really take away from that. Obviously, euro making up a large part of DXY. It could have some impact across the market a little bit more. But yeah, I haven't really sort of followed the euro enough at the moment to sort of fully comment on this. Obviously, if they're looking for it to come in flat, the statement is what's going to be sort of something that people will be watching about. But 15 minutes after that anyway, so maybe you get a kick one direction and you come back the other way, you've got CPI and we've got core month on month, year on year. And obviously with this one here, we're looking at the month on month. I've also got unemployment claims coming out at that same time there as well. But this is what I'm talking about with the US. So 2% is the target that they're looking for. 2.7, moving to 2.9. So if you get PPI in a little bit hotter, plus you get CPI coming in moving in the wrong direction, it kind of you've got to sort of think that you're going to hear something about this in the headlines in regards to sort of what they're going to do about it. Because yeah, everybody's going jobs, 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 and even Powell sort of said that look, that would be the Achilles heel that made him sort of come around to the idea of cutting. We've seen him now. That was at the Fed FOMC a while ago. And now we've sort of had him out of Jackson Hole, of course, say that yes, jobs is the thing. We've seen the impact on the market. But this is what I'm talking about. That's sort of like, everybody's so focused on the jobs. And yes, that is the main thing. And that's 100% of it all. But, we didn't see the follow through with US dollar to support that. And I'm not saying it did. I mean, it very much closed on its ass, but it closed in the range. And if inflation will still be part of the conversation, but it may just not hold the same weight as you know what I mean, as the jobs kind of data does at the moment. Unemployment claims coming out at the same time, looking to be reasonably flat. Okay, there's your press conference coming 15 minutes after that. That's going to be a very busy little period here. Moving forward, that's where we at. So that's Thursday night. And then sort of coming into the Friday, we've got 30-year bond auction. Not enough to sort of comment on this kind of stuff at the moment. Moving forward, we've got GDP over in the UK, 0.0. Okay, I mean, look, this is what I'm saying. That sort of like, this is just a little cherry-picked. Well, it's not even cherry-picked, but it's just because it's right here. This is the kind of economic data you're seeing coming out of a couple of these other places as well. That a slowing of GDP, this kind of thing. I mean, goods balance, it's still quite a negative number there as well. Yeah, maybe moving in a very slight kind of sort of positive direction. Not great there. We've got manufacturing production coming down. And this is what I'm saying. It's sort of like, the US data isn't that bad itself, in my opinion, anyway. Moving forward, and then to end the week off, of course, not even this one, 12 o'clock, really to sort of stretch it out. We've got consumer sentiment over there, which still remains to be reasonably strong. If we have a look at sort of where it's been at, I guess it's around the 60s low end of what it's been recently. Okay, no, maybe I take that back actually a little bit. It does seem a little bit low. What are we looking at? 58. So certainly, look, it's not as bad as it was around that sort of around that April period where we had obviously the tariffs are coming out, the tariffs, all this kind of stuff, not looking great. Bounce back up a little bit there, but seems to be cruising down there a little bit as well. So again, this might be something that could give us a little bit of a flick into the end of the week. But I think the main sort of thing is, as I said, just see how the market sort of digests what has happened with those moves over the weekend, and see how much of that is going to sort of flow through into obviously not just the Monday session, but through the rest of the week as well. All right, so yeah, onto the chart. So we got DXY. So look, as I said, obviously this is the sort of main drive. It's the main sort of thing that everybody's talking about at the moment, and this is the reaction from that NFP. Which, if you get onto a lower time frame, we can see that's the initial reaction. Bang! Look, it is what we kind of thought it would be. Particularly with that number, the print that we did get came down here. Second effort, tried to sort of, if you go down to a lower time frame, you can see this effort here. Tried to hold it. Second effort from the sellers. Third effort from the sellers. 1, 2, 3 drives down. Unable to do it. And as you can see, nice little sort of push off here, broke up and then closed back up and closed right on the supports of that range. Whoop, where are we at here? So obviously taking out the lows down here, sort of swept all that kind of stuff there. But I mean, look, we've had closes that have been, equally as bad over this last time since we've been in the range, since we've been down here. So equally, and these ones actually, this is technically a little bit lower. But this is what I'm saying. They're sort of like, if this was okay, such a surefire thing, and okay, yep, bang, we're selling US dollar and all this kind of stuff, it had a chance to break, backtest, sellers, put in a new low. I mean, that's it technically from a structure sort of standpoint. That's what should have taken it down further. Break, backtest, technically lower low, bang, and then it sort of moved back up into onto the close there. Now, look, this is the last couple of hours of the week, so it could just be a little bit of that sort of like, profit taking from gold, which came off the highs, the other kind of markets as well. But the thing is, again, look, if this is going to go down here, it doesn't really matter. You don't need to lock in your stuff so much. If your idea is that it's coming down to 96 or 95 or whatever your sort of target total is down over here. And I think the fact that it actually sort of refused to go down and managed to, for whatever reason, close up a little higher, puts a bit of a question mark about it. Look, it doesn't mean that this can't just be, kind of a bigger move back up here where we have break, backtest, and lower like that. Look, you could still definitely do this. As I said, the last couple of hours you kind of disregard a little bit sort of into the end of the week because most people are just like, probably maybe just the juniors sort of left on the desks and that sort of moving things. But the thing is that it managed to find some sort of either profit taking or balancing of this position. And this is what I'm saying, that if you thought it was coming down here, you don't need to hedge your bets. You would have, why didn't they just run it down a little bit further? You know what I mean? Like it's got everything. It's got its breaking supports. It's got, three sort of large bits of sort of jobs data through the week, which will support the idea of the cuts and the weakening of the US dollar. Um, why would you sort of buy back up? Why didn't we close down over here? This is just my thoughts. I'm not giving you like, it's not like a hand, here's the reason. Well, I can give you, I can sort of hypothesize about why I think it sort of rallied back up. And that's because I think you've still got to chuck into the equation the idea that inflation could still be part of the sort of equation, part of the reasoning for what happens in 10 days' time and at the sort of FOMC. So, we'll see how things open up. I think definitely if you break the lows of Friday night, well, there you go. That's the play. That's the sort of break, backtest, and lower low. Higher time frame. It's a new week. Plenty of time for them to run it down lower. But the fact that it did get back up into this and close into this onto this range just makes me think that okay, there are some buys here, and not to sort of say you can't dip down here a little bit lower again, but I would be sort of surprised. I wouldn't be surprised if it did find some sort of rally back up into the middle of this range. And I think you got to then again question that once again we're down here, bang, pushing them up. What is it going to take to actually get this thing to break one way or the other? Because we've seen in the past sort of what happens with these big rate cuts. They cut 50 base point last year, and it barely did anything. It was selling down like crazy for. Just to show this point, this was where it cut down over here. So I got it marked on this other one. There's too many of too many of these charts. Oh, is this one? Whatever. Doesn't matter. This is the point where they cut last year, 50 base point. And this was the talk, the talk, the talk. And this time here, we're also in a bit of a range. How long does this range go for? Now, it's 41 days, 39 days. Admittedly, look, this whole bottoming bit has been longer. But this is also, this last range that we're in here now, because this is on a daily. So if we get back to the actual chart that we're doing on a slower time frame, that is this point just down here. So this is the range that we're in right now. It's been bashed down. It's got other parts to it all. It's got the whole tariff things, all this kind of stuff. So I'm not saying that, hey, it's just that. But as you can see through the reaction here, they're going to cut, they're going to cut, they're going to cut, they're going to cut, and then, okay, chop, 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 and bang, 50 base point, and then we just absolutely took off to the other side. As I said, look, things don't 100% always repeat, but you got to sort of think that, okay, well, hold on, wait, this thing is also ranging through here. Yeah, it shot down under the low. So certainly if anybody had their textbook stops or anything down here, they got taken out. But we have seen a very fast sort of shoot down into this area. That was the Jackson Hole speech. And, it came back up very quickly with it all. So look, I'm not sort of saying that, hey, look, it's a definite, okay, bang, out the top here. But to me, it just puts a question mark on, are you actually going to break down here? Confirmation, take out the low. You take out the low, okay, well, we've got a target down here, and then really we've got a bit of a target down over here as well, like, these sort of major sort of lows. So, take out the wick, they're your targets, these two sort of cross ones here, so 97 and, 96.60, thereabouts with it all. But as I said, if this thing does find a little bit of a rally up here, I think that's going to make it a very interesting sort of situation. But we'll see how things sort of open up tomorrow morning. Onto gold. So gold absolutely flew like it has been doing, and this is what I was saying. Had that little sort of pullback middle of the week where it sort of got up here and it came down very hard actually. Like this sort of came down a little bit into the end of the session. I think Asia opened somewhere around here or so. And then we had that headline out about sort of like speculation on the Chinese markets and something. And that really hammered things down to the bottom. But overall, look, obviously, bang, it's recovered, moved right back up the top, even from that little sell down. What did it do? 127, yeah, 127% extension of that sort of sell down there. So look, all in all, I mean, you can't say it's anything other than bullish. But like we saw with US dollar, the last couple of hours, it kind of sort of sunk there a little bit. That's actually just the last hour there. So weekend markets, actually, let's just have a quick look at that. Might be able to paste it. Can I paste it somewhere? Oh, we can. That's good. Interesting. Awesome. All right. So, yeah, look, there are weekend markets. Look, there's not a great deal to take away. As I've covered a few times with these things, like, when these are starting to move up at like 0.5% or 1% or so, then you know something's kind of happened over the weekend. But all in all, not really anything that's jumping out massively here. Yeah, I mean, look, gold technically at this point is up $10 or so. So what's that, about sort of 95 or so? So back up around here, supposedly. Oh, look at that, you can see the chart go through as well. You're learning at the same time as I am. Look, supposedly opening up over here. I'd be surprised. I reckon by tomorrow morning it'll sort of have a bit of a sort of sniff and it'll open up around here. But, while US dollar is in question, this also puts this in question. We came right up and hit 36. That's a big round number. Now, again, look, you're not going to say that everything's going to repeat and it's all going to do the same. But if we go back to our previous all-time high, and again, I have to keep sort of saying this over and over. It doesn't mean it's going to happen again. But it also hit that big round number, 3,500. And we saw this thing crunch down like this. So, not to sort of say that, again, we're not necessarily going to see exactly the same thing here. But the thing is, it's a big round number. People will take it off. It's a psychological level. So there's an understanding why this thing actually started to, close up a little bit there. We had a big push. It was a big recovery. Where's the actual sort of print here? The print, I think it went $20 or something off the print, like the actual print straight away. 53 up to 80, so $30 or so, 30, $35 or so through that. Yeah, so up through here, and then and ahed about it a couple of times, and then obviously bang, sort of came down here. So I think very much, you probably sort of look, you had a bit of a retest of those highs. That's a bit of a zone for us now. Let's just mark this up a bit so we can work off these things, and that's kind of where you want to sort of see it. If we're going to say that this is a little bit of a sort of interim top, let's not call it a sort of medium-term top or anything like that. But if we're going to say that, okay, we're going to see a little bit of profit taking here, maybe if US dollar does actually hold that range, and we sort of are thinking a little bit about what might be happening with, the FOMC, other than just, okay, well, it's a sure thing, and look, maybe it is a sure thing, but if we see US dollar sort of move up a little bit, I think that is a little bit of question mark in the market. And this is at an incredible run. I mean, even the last 2-3 weeks or so, what have we done? Like $300 or something? It's been a big move. A lot of people in profit. You've taken out anybody that was short with a stop. Do we see a little bit of sort of profit taking? Well, these are the levels that you kind of want to see it sort of jump underneath if it is going to do this. So I would even sort of go as far as to extend this back. I don't like large zones like this, but that wick low there underneath 70, I think is where you would want to sort of see it just to confirm. You need to really sort of confirm this thing down here. What's this, electronic trading hours? Anyway, whatever. So we'll say short-term cooling. Should we come down under here? Look, this could just open up here and could keep running and sort of say that this was just a little bit sort of like, profit taking into the end of the week. We can understand that, and so on and so on. But I'd say if we do see gold out to the top side, I would say at the same time we're going to see US dollar commit to that bottom side and break that bottom wick there as well. But look, if it does sort of come back, that's the level you're kind of looking for there. Very choppy into this thing. The recovery wasn't sort of so great till we did actually get that number, but obviously low number, that's what the market was looking for. The reaction was kind of what we were sort of thinking with it there. So if we sort of mark out a couple other levels here, you got a zone through this bit down over here, and look through these sort of areas here. I would say if you come back here, it's going to be choppy down through this stuff here as well. It's going to need something really to change for it to sort of get right back. But, as I said, it could just be profit taking as well. And, we do have a habit of seeing these things in the market where they just happen to come up with something, some sort of miraculous headline. Over the weekend, we did see that China had been adding for a 10th month or something like this. But I think that kind of the joy and sort of, oh, China's buying may have sort of already played out with this. I don't know. Maybe this was them kind of buying through these sections here. But for the most part, last week it was just straight buying. Prior to that, we were seeing selling in Asia, buying in the US. We had a little bit of a back and forth with that. We had a big push in Asia on one of these days. I can't find which one was it here. Look, I can't be bothered sort of hunting that one down there. So we did sort of flipping back and forth. So I think that'll be interesting. Anyway, as for the levels, 3,600 top side, that's your sort of continuation level. Big round number. It's obviously been confirmed as a bit of a sort of short-term resistance. Underneath 71, see a little bit of cooling. With that, you probably look for any potential pullbacks because this thing's not going to go down without a fight. And we sort of laid this over the top. We go, okay, this is moving up. So there you're sort of, okay, we're done with this now. We're sort of seeing. Actually, no, we're not done with that, because what we might do is leave this here. Should it break above, that's where we might be sort of looking to sort of see, are we going to get a push to the next kind of fib retracement level of that, which is up around that sort of 36.20 kind of level. So, another 20 bucks to the top side there. Where are we going? So yeah, so come back down here. Look, I would say this would definitely sort of be an area that I'd sort of be targeting if you want to sort of look at some buys down through here. If you get back around 35.44, 61% retracement from that low from the sell-off. You've got a little bit of a horizontal support along here. Underneath that, 35.25. I think they're the levels where you're probably going to see some buying action sort of coming in should it get back down to here. There's very high likelihood as well that you just see this, if anything, sort of sell down a little bit and then accelerate on a little bit further. It's very hard to stand in front of this thing at the moment. All right, move along. We got Aussie. So Aussie. So it's quite a push off that sort of bit of data there, and just kept on going. But as you can see, same sort of like with the gold, actually a little bit sort of came back a little bit harder than with the gold. And very similar to inline, or a little bit with the US dollar, but was in DXY. But you could see they started to sell this off prior to the US dollar sort of actually having a sort of attempt. So US dollar had 3 attempts with lower lows. This thing only put in one high, and that was it. Second effort, obviously you can see there wasn't enough to sort of overtake it, and then sold down lower low, and then obviously just a little bit of oof off the lows and that into the close there. So look, it's kind of coming back. It's testing the top side of this previous zone. Let's mark this out. Let's turn it into a zone. This is the area for it to sort of get back down underneath there and underneath 40. If you did sort of notice where it did sell down, smack bang, well, actually 1 point before it hit into that 90s. And I cover this all the time, that sort of these are the levels that just garner repeat price action with Aussie. So into those kind of areas over here, we've seen this as a little bit of a resistance previously. Market said that's great, give us a shot at it. Bang, they sold down into it again. And if we have a look at this, it's obviously looking like it does want to sort of come back down a little bit, just based off how it closed. Again, the market's had the weekend to think about things, to sort of see how it wants to sort of act with stuff. And really, to me, it's kind of like the big question is this move here and across all these things just banking some coming into the weekend? Or is that sort of showing us a little bit of, okay, hey, maybe we've hit a level that we're happy with for now. We've been waiting. This was a massive week in the data, very highly anticipated. Now that's sort of come and gone. CPI is coming up this week. CPI is looking to tick up. A tick up in that technically should see a little bit of a bid under the US dollar. Do we sort of put our attention, our minds towards the idea that inflation might go a little bit higher? And then then after that, you can sort of really start to think about FOMC. But FOMC is 2 weeks away, which, in FX is quite a while. So, the here and now is CPI, and that's going to be the talk. That's going to be the data for the week. CPI, and it's supposed to come in a little bit hotter. If it comes in hotter, US dollar's going to run. If US dollar's going to run, you're most likely going to see a little bit of cooling on gold. You're going to be seeing a little bit of a pullback on Aussie. Do you want to sort of keep buying this thing up just to have it sort of fall on your head? Who knows? We'll have to see. And this is why I'll be interested to see how Asia opens tomorrow to see are they just going to keep running this thing up. Most likely, I would say you'd see another effort up here, like the sort of structure that we always sort of expect, which is that sort of like, one effort, pull back, find support, that area there. But I think this leg, where this turns around, it will be very crucial. So if this comes up and just fills the body over here and doesn't even get, or even if it gets partly into the wick or whatever, basically as long as it doesn't take out that wick high, that's it's putting in a lower high. Emphasis then goes back on the lows, wherever this thing rallies from. This could be the point where it rallies from here. It could also come down here. That could be the rally point. It doesn't, like, I don't have a crystal ball. I'm just sort of saying, where may that be? But if you put in a lower high after a second effort up over here, emphasis then goes back on that sort of swing point down the bottom there. And if it takes out that low, that gives you lower high, lower low, and then we can expect this thing to come back a little bit lower. And then we can start to look at, okay, well, where are the sort of deeper sort of retracement levels that Aussie might sort of be coming into? Well, this is an area where we've seen buyers kick into gear. We know the sort of the 20s, the 60s, the 90s, these kind of things are good for it all. But I would say at the moment, these are kind of where you'd probably be looking at. Should this setup happen, i.e. a rally attempt, take out the low, where we're moving to, 65.08, 64.80. Should that sort of come back down here? The flip side of this is, hold on, wait, bang, we've taken out the highs. It still ended pretty bullish in the grand scheme of things. But as you can see, this is very much a concern. Like, you know what I mean? Again, this is what I'm saying. If this thing wants to run up over here, this was your time to do it. Why didn't they close at 65.80? Or even keep pushing on higher? Is that just profit taking to that? Because really, what it is a little bit of a range through here, and it's just closed back inside the range, which puts the emphasis on this being a fake breakout of this particular small range here. Puts the stress onto the bottom side here. It's pretty overbought. This is on the daily. So I think certainly if you come out and you take out those lows down there, that's going to be our bottom side of the range. I mean, look, it's a little way off, 50, 40, 40 points off. So look, and this is the point that I'm saying. So bottom, this is the point that I'm sort of getting at with this. I don't think it's so clear cut that everybody's sort of saying, yep, it's a sure thing. Yep, US dollar's going down, this and this and this and that. The market loves to get everybody looking at something and then absolutely rip the face off everybody with it. And this is what I'm talking about. Look, it's not a guarantee that you're going to see this thing fail and come back down over here. But if you look at the RSI on a daily, it's overbought. This is technically a tried attempt to break out. Sellers came in where we've seen sellers previously before, push it back down, closed inside the range. If it comes out the bottom side here, that could be fake breakout, bang, back down over here, considering both sides of the coin. So I think certainly it's going to be an interesting open for tomorrow. So let's put a little alert up here and say, okay, top side, just so above 62. Top side there. All right, moving on. We have copper. And copper came back in, hit the zone where we kind of covered this. This was throughout the week. We're on the daily here. Support level here. I told you people will be buying it here, buying it here, buying it here, buying here. They would have tried to buy it all the way, all the way back down here. This is the lower level. As soon as they got in there, they were like, bang, give me my money back. Oof, and they sold it down. And as you can see, pushing back down into this lower side here as well. One thing I will also just add as well is because obviously copper is a little bit of an Aussie asset, Aussie proxy asset. It has been a little bit askew more recently, I'll give you that. But, in theory, it is pushing down here. One thing I wanted to actually just draw the attention to was the equity markets. And it doesn't look so bad here, but if you look at this thing on a shorter time frame, particularly in relation to the NFP print here. So there's a thing that I use where they're trading around these data points and that, which is basically called the data drop. I call it the data drop point. I don't know. Other people probably got a name for it, but whatever. That's what I call it. And it's here. This is the data drop point, where the point in which the price is at when the data dropped. The bounce, move up here, held, and then crunch. And I think you need to take note of that. Like, again, the thing is with this a little bit different, and this does lead back into my thoughts with Aussie, but with the equity markets, they love more cash, lower rates, people borrow money more, there's more money in circulation, more money to speculate, more money to pump up stocks. They love a cut. But you got to understand that they've got to be cutting for the right reason. They can't just sort of be cutting because, hey, you know what, we're cutting and more money and all this kind of thing, and everything's always super rosy. And the thing is, that print had 22,000, um, over 350 million. That is not good. That is not sort of like, hey, things are super rosy. And I think that's why you got this initial pop up here, and everyone's like, yeah, yeah, cut's coming, it guarantees the cut. Then they go, hold on, wait, wow, 22 is actually pretty bad. Bang, and they slam that down. So I think this is quite telling. Look, it got a little bit of a rally like these other things did as well, but is that going to sort of continue into Monday's sessions? Now, it probably won't happen in Asia because it doesn't really do that kind of stuff, but that's a little sort of measured move for you just based off that price action. So that's a little sort of bear flag should this thing come and obviously sort of take out. This would be the level you want to take out here. Put a little alert. Bear flag. Coming down over here. Ah, too many alerts. One sec. Oh, there we go. So yeah, it's just a little bit of a sort of something to watch on. And the reason this is relevant is because Aussie, as we saw with Aussie's second push, so if we have a look at this here, and this is the point that I'm sort of saying, like I'm getting to a point with this, that we saw, US dollar against the rest of the market had 3 attempts at its lows. Well, Aussie obviously is still against the US dollar. Look, it's not part of DXY, but it's it should vaguely run in tow. But you've also got the fact that this is selling down, and with this selling down, that's risk off, and Aussie is not a risk off happy kind of thing. I'm trying to say it was a double negative. It's a risk on asset. So, while things are pumping up higher, it should have been sort of rocketing up a little bit more. And we got the initial reaction, which moved in line with this. But once it started to sell off, well, we saw Aussie obviously sell off as well, and then sort of move back down to the lows there. Obviously closed in that little zone we just covered Aussie. But I think this is a factor involved with it all. And it's not just, okay, well, cuts are coming and all this kind of stuff. They want the cuts to be coming, but they want it to be in a prosperous kind of environment. And when you've got 22,000 jobs added, that's not sort of rosy. So you're seeing, okay, people sort of go, hold on, wait, let's hedge our bets a little bit. And that against Aussie means that this could be weighing on it to come back down a little bit lower there as well. So it's just something to keep in mind in terms of with Aussie as well, just to keep an eye on sort of risk and equity markets. If we see those come off, even with a weak US dollar, it's going to slow down what Aussie's appreciation to the upside could be. And factored in is a little bit the idea with copper as well. And we saw that, copper's obviously sort of like the second they had a chance to sell it, bang, they sold it down. Look, copper's not as strong a sort of correlation as it has been in the past. Used to be very much okay the case, but, we've seen copper going to the highs here. Aussie was nowhere near its highs. Copper's got smashed back down. Aussie just ignored it. So to me, that's like, okay, correlation's off a little bit here. So I think it's kind of something to factor into it. So it's just something to sort of think about, but I wouldn't be hanging a hat on the whole idea of it. But again, if metals are all come off, there's a good chance we have some copper down on the bottom side over here. Look, if we get underneath these levels over here, I think copper's going to start to pick up speed again. I think this is just a little bit of a market like, what the hell? And this is why that I think if they came up to this zone, if you tried to buy this zone here, which, is a legitimate area, I mean, it's a decent bloody pullback. I'm sure nobody here thought they were going to get a fill that quickly. They've held that capital in that position for a month, and now they've got the chance, and they're like, bang, okay, and they're out. So I would say that we still have some downside over here. And maybe once this thing starts to break down over this side over here, maybe we see a little bit more risk off across the market. And that's the thing, because obviously copper is quite sort of heavily used industrial metal. Well, that's not exactly, if they're sort of, if they have to sell it for cheaper and cheaper and cheaper, well, why is that? Because demand's down, lower demand. Well, we got to reduce the price. that's not a time in which, heavy demand, things are prosperous, copper moves up, price moves up, and the same is inverse in the other way. So if this starts to move down, that's a little bit of sort of risk off happening with copper there. And finally, just US dollar, China. So the one, and we saw this thing bounces again. Just a recap, it's on this super high support area. These are horizontals, actually weekly or maybe even monthly supports through here. We got the big sort of ascending triangle. First effort pushed up over here. It's gone to the lower time frames. Had a little bit of an effort, pushed back down, and this is what I'm saying. That's sort of like these are the levels they expected the buyers to be. Held, obviously that was a pullback, that's where we put the buyers in there, but it held again. Once they gave up, a little bit of an effort through here. It's not a big, so it's just more like a springboard, and it garnered a little bit of sort of response at the same, but obviously not enough to turn around. This is still also a little bit of a springboard, but obviously held there a little bit more before sort of moving up through that leg. And if you get right down into this and you look at how quickly they were on the ball with this, that just pierced into there, and bang, we saw it buy up coming off the lows over there. And what I've been sort of very sort of vocal about is watching this chart, because I think if the Chinese, like the PBOC, sort of start to think, hold on, wait, we don't want a super. Obviously, it's not only their decision, but they do quite strongly hold, well, sort of manipulate this pair. If they want to sort of see it a little bit higher up, one thing is, one, they'll get it, but two, that is going to sort of weigh on the Aussie as well. Like Aussie should be so much higher. Aussie should be 69 cents at least. With the strength of the one, I mean, look at this. This is the one, or yuan, or whatever it is, and that we're talking prices back to so just November 24. Wow, better part of a year now. Aussie's nowhere near where it was a year ago. Gold, obviously sort of flying. Gold's taking advantage of this. But again, if this kind of moves up the other side, so I actually did one of these charts. Let me see if I can find this little correlation that I found with this quickly. Alright, where was it, this one? This chart here. Now we sort of lay gold. Oh, we've already got gold here. Cool. So if we lay gold over the top here, this sort of goes to show that it does have a fairly, if we can sort of line this stuff up here. One sec. All right, so save at the time. I'm sort of trying to get this thing lined up. You can see this. This is obviously it's, the one as the candles. Little blue line there is gold, and you can see that sort of like particularly through these areas over here. Look, the peak of the one back over here was sort of in January, and it's been selling down all the way through here. What's gold been doing? That was around the time that gold was flat through here. It wasn't exactly sort of moving down. So it's not a one-to-one sort of relationship here, but you could certainly see as this was moving up, gold was not moving up. Yeah, look, it wasn't moving down, but it certainly was putting the handbrake on gold's movements. As it started to turn and started to move back down, that's the same time that gold goes, oh, great, that's a green light, let's go. Bang, and it's moving up, moving up, moving up. Even this little spike here, we saw an inverse thing. Fast move up. Gold didn't obviously sort of crash back down, but it certainly put a dent on its growth at that point. Resumes back the selling down, resumes the buying back up. Through this area here, gradual little sort of push back down, gradual little push back up, and then most recently, start of the third week through of August, that's where gold really started to take off, and this is where one really started its latest little sort of push back down. So to me, this sort of just shows that there's a fairly strong sort of correlation between the two. It doesn't mean that, okay, if the one's going to sort of hammer up to the top side, that, okay, we're going to see gold necessarily come back. It won't necessarily be a one-to-one kind of relationship, but it does sort of mean that, if we do see a bit of a push up on the one, that this may sort of at least slow gold for a short period of time. if not actually spark a little bit of a sort of pullback with it as well. Obviously, there's other factors involved with stuff, but this is why I think the one's an interesting chart, or a very sort of interesting chart to sort of keep an eye on. Because I think if this thing starts to push back up, I think this could be an area where we sort of see gold push back down. The price is over here on the left for gold. I don't know if you can actually see that. Yeah, you can see that on the screen. And that could see it sort of come back down around that sort of level, like, between that sort of, 30, where we are, 34 into mid 34s or so. So it's just something to keep an eye on. Look, the other side, again, always with these things, you've got to consider both sides of it all. And if this thing breaks down through here, we could just see gold accelerate even higher. But as I said, the thought is that, because this is such a strong height, let's get gold off here for 1 second. Because this is such a strong high time frame support, it's not going to break easily. We've seen sort of, a couple of tests here and it sort of moved back up, obviously sort of a little duck down underneath it. You've also got this sort of rising support moving through here. And it's just something to keep an eye on, that sort of like, should this thing sort of start to rally and push back up, look, it's not really too much of a worry till it gets above 723. Certainly above 723, mate, put that like that. That's going to open you up to a push back up into the 730s for sure, I'd say. But you deal with that when you get to that. But what I'm saying is that this is a strong support area. I don't think it's going to break lightly. If this does see a little bit of a rally through here, well, we could see that sort of put a little bit of a handbrake on gold, at least in the sort of medium term. And onto a lower time frames of something we can action with that, and that is obviously this little support area through here. Well, was support, now it's resistance. That's where you need to get through. So above 715, you've got this falling resistance. You've got the next horizontal. It's not going to be an easy chop through, unless you have some sort of drastic sort of bit of news to push with it. But there's an idea that you may sort of see this hold this support area, maybe a little dip down, but it could hold this support area and then sort of dribble back up towards that sort of 715. And I think that sort of is going to slow, at the least, sort of slow gold down from major breakouts and that sort of moving forward. All right, that's it from me.